Global equities, including Indian, tumbled last week as central bankers embarked on the journey on interest rate hikes. As anticipated, the US Federal Reserve Chief Jerome Powell announced a 50 basis points rate hike in May policy meet, while the Bank of England raised rates by 25 basis points. However, what surprised the domestic equities was the out-of-policy 40 bps repo rate hike by the Reserve Bank of India. It also increased the CRR limit by 50 basis points. Equities are now battling fears of record high inflation, dented prospects of corporate profitability, and likelihood of contraction in economic growth. Besides the ongoing Ukraine war, COVID-19 related fresh restrictions in China and select disappointing corporate earnings took their toll on the markets. Eventually, the S&P BSE Sensex ended the week with a heavy loss of 2,226 points or 3.9%. The NSE Nifty 52 plunged 692%, its biggest weekly fall since late November 2021. However, as we sit near 2-month lows, investors are wondering if the market has overreacted or is there more pain ahead. Let's go to market analyst VK Vijay Kumar to know the road ahead for the markets.
The excessive volatility, particularly the weakness in the market, is a reflection of the nervousness in the market. The most important single factor roiling the global markets is the increasing inflation globally. The markets are not sure. The markets are rather skeptical about the ability of central banks to contain inflation. Perhaps more aggressive monetary tightening than is expected now may be warranted to contain inflation. That's why the dollar index is at 104 and the 10-year bond yield in US is above 3%. This weakness in the market, correction in the market need not be seen as an overreaction in the market. Perhaps it is a rational response, because even now valuations are higher than historical levels, whether it is in US or in India. Investors need not rush in to buy aggressively at this point of time, because there can be further dips in the market. The Nasdaq is at a 1-year low, and the S&P 500 is again approaching a 1-year low. These are bearish indicators. But of course, there will be opportunities to buy quality stocks. Dips like what we are witnessing now may be used to buy high quality stocks in a calibrated manner, not aggressive buying in large quantities. Investors can buy high quality stocks in installments in a calibrated manner. Preference can be given to value stocks over growth stocks. The successful IPO by LIC can bring some cheer to the market, to investors also. It can bring some cheer, but that alone will be insufficient to improve sentiments in the market.
As pointed out, the near-term outlook remains volatile as investors remain skeptical of central banks' ability to tame inflation. As regards this week, shares of Asian Paints, Cipla, GNFC, Tata Motors, Larsen & Toubro, Siemens and Vodafone Idea, among others, are likely to be in focus as the companies are scheduled to announce their March quarter results. Meanwhile, the primary market will be buzzing with activity. The mega 21,000 crore rupees LIC IPO received an overwhelming response from retail investors. The IPO was fully subscribed on the day 2 of the offer period itself, despite the broader market weakness. The issue closes for subscription today. The listing is likely to be on May 17. Further, Prudent Corporate Advisory Services and Delivery IPOs will open for subscription this week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.